Thank you very much. Welcome to Besonderheiten Team, Better Monetary Channel. I'm sitting here with Ryan King, and he's going to introduce himself.
Yeah, I can do that. Thank you very much. Hey, nice to meet everybody. My name is Ryan King. I'm the Executive Vice President of Capital Markets for Equinox Gold. And just so you know, Equinox Gold is a large diversified gold producer. So we're not only producing gold, we explore for gold, we develop gold, and we're a publicly traded company. So we trade on the Toronto Stock Exchange under the symbol EQX. We also trade on the NYSE America. So you can buy it in the United States under your home exchange under the symbol EQX there as well.
And I was impressed. How many people do you have working for you? How many employees do you have?
Several thousand employees across the whole business. I don't know exact number, but it's probably something around 15 plus thousand direct employees within our global business.
Okay, right. Because I was asking you to talk about like the specialties of a gold mining share, because it's very depending on the gold price, right? Like if
Indeed.
you
Profitability.
Profitability.
Yeah.
Can you explain that, like how you're working with low gold price, and then
Sure.
when it's rising?
Yeah, no, I mean, right now today, global average to produce an ounce of gold will cost around 16 to 1600 US dollars to $2,000 per ounce. That's about the average cost for all of the gold producers in the world to produce ounces.
1,600 to 2,000.
Yeah, it's a range, good rule of thumb. And as we know, or as maybe some of your audience might know, today gold is currently selling for US $4,800 per ounce. So, as you can see, we are profitable significantly right now. Actually, today in this market, gold producers have the highest margins we've ever seen. So, back to your point, that obviously if the price of gold goes down, we're less profitable. As the price of gold goes up, right now we are very profitable, and we've got typically generally a fixed cost business at our assets. Now, we will see the prices go up and down of gold. We'll also see some of our input costs go up and down, but fairly insignificant in the grand scheme of things. So, yeah, like I say, I mean, it's a very exciting time for gold companies, and publicly gold companies are trading at a pretty reasonable price. But recently, with the price of gold going up as high as it has, there's a lot of gold equities that trade at discounts, but we're still generating significant amounts of cash flow.
So how was that in that time when like the gold price was rising for the last 2 or 3 years significantly? Yeah. But you had a hard time, I guess, before that, like when the gold price was low. How did you manage, or what's the risks, or what is the problems of companies like this if you have a low gold price?
Well, that is really just it. I mean, some of the companies hedge gold. So when you hedge gold, you get a bit more of a guaranteed price. Most gold companies don't like to hedge gold. They want to expose the business to potentially rising gold prices. But you always have to. You basically manage what you can control. It's very difficult to manage the price of gold, but you can manage some of your input costs, how you mine an asset, do the best you can from an engineering perspective. But really, you cannot. We're a price taker. So when the price of gold is low, a lot of times gold equities will trade very low. And to your point, yes, 2025 was a very significant year. The gold price went up over 100% in 2025. And why is it doing that? I think we have to ask ourselves that question. We've seen significant amounts of global debt. We are seeing debasements or devaluation of fiat currencies because countries around the world continue to print new dollars because they want to continue to prop up their GDPs. And therefore, hard assets like gold and silver and copper are seeing a tremendous rise. It does feel like from many macroeconomic advisors that we're in a very structural shift. Gold, for example, has now become the second world reserve currency underneath the US dollar that is losing steam. And it's losing steam because many countries like China, Russia, big global countries around the world are selling their US dollars and buying gold because gold is a neutral reserve currency. It's not affiliated with any geopolitical agenda. And so therefore we're seeing a significant rise in the gold price.
So how do you see the future of gold in your company? Do you have a positive prospect, or how do you see the world?
Well, I'm going to have a balanced answer here because self-interest is a great motivator. And as an executive of a gold company, we'd love to see higher gold prices, right? Because that'll likely drive our profitability. That'll likely drive our share price performance. But, we've seen a significant rise. And what's happening so far in 2026 is we've seen the gold price go up to $5,600 an ounce, and then it came way down to $4,200. And then we saw the gold price rise back up again, and it came right back down. So twice already this year, we've seen significant volatility. What I think is happening right now is we're in a bit of a price discovery environment. Because of the structural shift that is happening globally, where the dominance of the US dollar is coming down, we're trying to globally understand where is gold and what should it be priced at. So I believe we'll have this continued volatility for a while now. We're particularly having more than normal volatility given the geopolitical events that are happening around the world, Russia, Ukraine, and Iran. But I actually think this fuels the fire for gold. We're spending more and more dollars, even with these international wars, and it's a terrible thing. But that actually bodes well for the hard assets. So I think over time, we will continue to see higher gold prices. I mean, if you go back to 1970 and you go through to now, gold has had its ups and downs, but it has gotten higher and higher and higher over the years. So I think if you have long-term views, we will see higher gold prices in our lifetime.
We hope. We will see.
We will see,
Okay.
yeah.
Thank you, Ryan. Thank you for the interview.
Yeah, thank you.
Thank you for the spontaneous interview.
Of course.
And good luck for you and your company and
Thank
your
you.
share price.
Thank you very much.
Okay. Bye-bye.